Hi guys, welcome to Khan's Secret Nugget channel. Here we're going to explain how money is created via fractional reserve banking system. So the question goes, all the commercial banks and credit unions of a country, econ land, are operating under a reserve requirement of 10%. And this reserve requirement is set by the central bank of this country. So now the part A of the question is, what is the value of the money multiplier given this reserve requirement of 10%. So let's first answer this first part of the question. So if the reserve requirement is 10%, what is the money multiplier? So money multiplier calculation formula is 1 over the reserve requirement written in a decimal form. Therefore, we're not going to write it as a percentile form, 10%. We're going to write it as a decimal form. So 1 over 0.10. That's the decimal form of 10%. That gives us 10. So we have just answered the first part of the question, that if the reserve requirement is 10%, the money multiplier is 1 over the reserve requirement written in a decimal form, which is 10. Now the second part of the question is, given that reserve requirement, maximum how much money can be created via the fractional reserve banking system based on this initial deposit amount of $5,000. So if you went to your commercial bank and deposited $5,000 in your account, and in that country econ land, all the commercial banks are operating under 10%, then how much money ultimately can be generated via lending operation of these commercial banks? That's also known as fractional reserve banking system. So let's follow how it is done. So fractional reserve banking system refers to a system in which commercial banks are required to reserve a portion of the deposit they accept from their clients as a deposit, and the remaining portion of the money the commercial bank can loan out to the individuals or organizations who are seeking bank loans. So therefore, operating under a 10% reserve requirement, a compliant commercial bank, let's call it your bank's name is Bank A, must keep 10% of that money, right? That $5,000 they just accepted from you, they hold 10% of that. So 10% of 5,000 is what? 500. So the $500 they must hold in the hand. They cannot give it to anybody as loan. But the remaining 90% they can loan out. So 10% to hold and remaining 90% to loan out. So therefore 10% of 5,000 they have to hold. And the remaining 90% is 4,500 they can loan out to, to another customer. And that customer got their $4,500 and they can deposit that money to their bank account, right? And that bank can also loan out the 90% of that 4,500, which would be 90% of 4,500 would be $4,050. So if you add all those transactions, you see one thing, the amount is getting smaller and smaller, right? Initial deposit was 5,000, then a 90% of that amount was 4,500, then another 90% of that amount would be 4,050, and so on and so forth until the money disappears. This process will continue, this lending operation by different commercial banks, holding 10% and loaning out 90%. This fractional reserve banking activity will continue until the money disappears. So if you take a spreadsheet like Excel or others, and you do like this, calculate like this, initial deposit 5,000, then 10% to hold, 90% to loan out, which is 4,500. Again, 10% of 4,500 is $450 to hold, and the remaining $4,050 to loan out. If you calculate all those and add those money up, you will get $50,000 in total. So that is to say that we can save all those hand calculation and come up with the 50,000 by using the money multiplier value right away. We calculated money multiplier to be 10, so that gives us the hint that every dollar we deposit to the commercial bank, ultimately $10 will be created through lending operation. So every dollar initially deposited will ultimately become a $10 worth of money creation via fractional this banking operation. So therefore, total money created, quote and unquote created, will be 10 times more than initial deposit. So initial deposit was 5,000. So to multiply that with money multiplier value 10, so 5,000 times 10 will be equal to $50,000. So the total money will be created in this example will be $50,000. And we can double check that by hand calculation, like this process of iteration, right? That every time amount is going decreasing a little bit, right? 5,000, then 90% of 5,000 is 4,500, then 90% of 4,500 is 4,050, etc., etc. And if you scroll down like that, create a spreadsheet, and you add all those transactions, you will see that it will be $50,000. So please drop me a line if you have any question in this regard. I'll be happy to answer. Thank you so much.